In market news now, Asian stocks rose after data highlighted a resilient U.S. economy, boosting investor sentiment ahead of next week's state of the central bank's policy meetings. The U.S. economy grew faster than expected in the fourth quarter as consumers boosted spending on goods, data showed, but it also could be the last quarter of solid GDP growth before the lagged effects of the Federal Reserve's jumbo interest rate hikes are fully felt. Locally, the rand weakened against the dollar after a smaller than expected rate hike from the South African Reserve Bank. But to talk to us about the latest when it comes to the markets, we are going to be talking to Luxolo Mahlomakulu, who is from Mazi Capital, to basically get a sense from him in terms of the week that was, some of the key themes that stood out. One of the key themes which we were talking about, especially yesterday with our market analysts, was that we're going to be looking at the Bank of Japan possibly altering its yield curve control policy around April when the new governor does eventually start off his new job, now that the current one, his term is about to expire in April. But other news that came out was around U.S. earnings, which has also been a key theme, because going into this U.S. earnings, analysts were already expecting that it was going to be rather lackluster. And just to continue from some of those themes that we were talking about, one of which was that Bank of Japan's policy possibly being altered in April, but the other was also U.S. earnings. But let's get a perspective in terms of the market dynamics for the week, and we're going to do that with Luxolo Mahlomakulu from Mazi Asset Management. Luxolo, thank you so much for your time. What's your assessment of the current market sentiment right now?
Anastasia, I think the market sentiment is a very bullish one. Driven largely by the China reopening trade. As you can see, markets globally, are performing quite well. Locally, the all-share index, is up north of 15%, driven largely by your big industrial counters, especially your tech names. You can see the likes of Nasdaq, up over 27% year to date. So is Prosus, inching closer to that. And then the local exposure on the likes of Truworths, up over 22%. You see some very good trading update coming through from those retailers reporting over some their December footfalls. It was quite impressive to see pretty much Truworths, Foschini and Woolworths, once they reported those sales updates. You saw the stocks were well beat on the post of that. The only disappointing one was Mr. Price. I think Mr. Price here was the only exception here to the rule. But other than that, it's been a very good start for the markets, and then the sentiment is a very positive one.
Speaking of those updates, one of the other things coming out of those trading updates was the issue of load shedding. How are you foreseeing this, especially when it comes to the mall operators as well as the retailers as well?
Yeah, it's been a very tough one. For the retail operators, Anastasia. I think what you can break it down to is that, you've got the mall operators that are very, very, regional or smaller, and then you've got those are slightly bigger ones. The smaller ones are definitely battling to have backup power generators, while over the bigger ones do have backup generators. But net, that load shedding is definitely eating up on the margin for these guys. Also, the costs, that going through the roof. I think I remember Astral Foods, came up with a trading update earlier in the week. Saying that they are spending roughly about 5.3 million every 48 hours to power their 12 megawatt generators. So those higher running costs, and then also the input cost, especially in the case of these food producers. You might recall that maize prices have gone through the roof. Now that is an input cost into the whole mix, so it's definitely feeding through the whole margin. I think at the end of the day, it's all going to come and bite at the consumer.
Right. So let's talk about U.S. earnings season. What's been your big takeaway so far?
It's all been dominated by the layoffs from those tech companies. I think Microsoft was the first one to announce a big layoffs, and we saw IBM, SAP, Intel, all basically talking the same thing. I think what you need to understand here is that interest rates from the U.S. were basically at flat at the start of 2022. We ended the year up at about 4.25%. So that definitely is impacting the companies, especially those tech-heavy names. They are very sensitive to higher interest rates. I think, so far, I think year to date, I mean, we've seen roughly about 46,000 layoffs being announced by the U.S. companies.
Right, before I let you go, just quickly, one key event that you're keeping an eye on going into next week.
Put it locally, the collapse of that job coalition talks, I mean, that basically led to the popular ousting. One, it means service delivery is going to be impacted. We've got load shedding here, so it's a double whammy definitely coming through. Transnet also, I mean, being dysfunctional. I mean, we've had now Richards Bay coal export shipments are at 30-year low. I mean, these guys are definitely bleeding due to the dysfunction of Transnet. Also, I mean, what you might recall, China have reopened their gates. I mean, you've seen now tourist numbers going through the roof, especially during that Lunar New Year. That maybe might be the silver lining in this whole issue that we're facing as a consumer.
Luxolo, thank you so much for your time. That is Luxolo Mahlomekulu, who is from Mazi Asset Management. We now go to SME on Point.